This is More Knowledge, More Wealth with your host, Gabriel Shaheen. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shaheen.
Good day. This is Gabriel Shaheen, certified financial planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go on our Knowledge Center, which gives you a direct link to YouTube, where we've had well over 1 million views, multiple videos that help answer the questions that you have. And if you want to put an inquiry so we can talk about it on the show or create a Knowledge Center video, please send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And also you can go get this episode, any one of our previous episodes on Spotify, podcasts, you name it, folks. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commission, true fiduciary, folks. And we talk about all important topics of personal finance. That's where you are today, how retirement looks like, investments, estate planning, insurance, folks, you name it. Anything that involves a dollar sign, we can help you with. And we are offering 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost to help relate this show to your specific situation. And we have offices all across the country that we can help you with. Folks, give us a buzz. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help answer those questions that you have to help with your financial situation.
Lots to go over today, folks. As we know it, we're in the heart of tax season. We also got going on market volatility. We always know what's going on, or don't know what's going on, with politics and with Doge and with tariffs and all that. And the stock market just started this week off with its normal volatility. It's going up and it's going down and so on. But it feels like it could be maybe on its way up. But regardless of the case, I don't know. Markets go all over the place. I think the goal today is to talk about what everybody's hearing. And I'm hearing a lot of more younger people just bringing up to me what I call the social media experts. Now, these social media experts, it's crazy because you're seeing people talking about how they're jumping into all these individual stocks, such as Nike, such as Google, such as Hims, all these I don't want to call them, dare I say, and I call them meme stocks, because they're not. But you have people giving these strong opinions and quite frankly don't know what they're talking about. They're looking at previous history of price-to-earning ratios, which is a key indicator, but just always know those are old pieces of information. Versus where you have like a Google wondering why they're so low, and it seems like, as people are saying on social media, the buy of the century, when, oh, by the way, they had almost 5 days in February 28th to March 4th where the Google ads were not working. I mean, if you look at the thread on Google support, you had tens of thousands of people complaining. Imagine how many it was actually affecting. So yes, there are some serious issues going on with that organization right now where they seem a bit scattered. And then you have other companies out there that are just, people are recommending that may or may not make sense, but guess what? Nobody knows with the individual stock. So this whole phenomenon that a lot of us believe is just stay in the indices, stay in the indexes. That averages 10% rate of return a year. By the way, that is not guaranteed 10% rate of return. And oh, by the way, the index yields roughly 1.5% yield if you look at the S&P 500. So these are all very enticing items. But then you start hearing other people talking about other option overlay income strategies. Now, whoa, that's a mouthful. So let's go into more detail. You have these 3 symbols, and I've been seeing them all over social media. You have the SPYI, you have which is the NEO's S&P 500, high income fund. Yet again, options. You have the Global X NASDAQ 100, the covered calls, so essentially on QQQ, that's Q yields, QYLD. And then you have the JP Morgan Equity Premium Fund, which is JEPI, J-E-P-I. You have these newer funds that are coming out there, and you're looking at, sure, what the average price to earnings ratio is. You're looking at what they've historically yielded, a rate of return that they have done. Now, keep in mind, S&P 500 has significantly outperformed all those since the records go back in October of 2022. But here is the part that people are really selling on social media, saying, oh, all you need is $1 million a year. And on the SPYI, you can get $10,000 a month of income, which people are thinking to themselves, that's $120,000 a year. That's a 12% yield, which, oh, by the way, they're doing it. And so they could do all that, right? Makes sense, sounds great. Who wouldn't want that? And get better than market rate returns, right? Because market does 10%. And then they'll show you also a calendar here of how your appreciation would have also gone up as well. Sure, underperforming the S&P 500. The part that bothers me about this is they're looking only at a limited interest rate environment. They're not sharing with you when these funds came out or when the history comes out in August 31st of 2022 to December. They're not sharing with you, yeah, you in fact caught that yield, but the portfolio was down 10%. These are very heavily interest rate sensitive funds, and people just seem to ignore that because these social media financial advisors, I wanted to call them idiots, they don't know, nor do they care what has happened historically. They're over here to tell you today, as I speak to you, these are great. And when you look at the return over since inception, these accounts, these holdings are down. They have lost money throughout that period. But hey, you yielded 12%. Yet again, this is the garbage that we're consistently hearing. That's specifically on the SPYI investment. It's the same crap for the QYLD investments. People say all the time, why don't I just do that? Yet again, you look at a 5-year mark, you're down 7% over 5 years. From 5 years, from middle to late March, it's down over 6%, 6.5%. Oh, but hey, aren't you happy with the yield? No, you've lost money in that period of time. And the yield wasn't always 21 or 12% as well. And so you're seeing this time and time again, and it quite frankly is annoying. Then you have the JEPQ, which is another one that people like to always talk about. This is another frustrating one. And this is yet again JP Morgan, same exact crap, same concept, same everything. And sure enough, now this one doesn't quite have a 5-year experience, but it is the same crap. This one is up about 7% in that same period. So it's not in that same period because remember, this one did not capture all of the 2022 drops. And when you compare that to just how the S&P 500 is done in the past 5 years, which yet again, it's just people often overlook this. And this counts all the losses. This S&P 500 over the past 5 years is up almost 150%. And oh, by the way, that's after these recent drops that the stock market is having. It is extremely frustrating, and I see this all the time. People are just seeing social media and just acting and buying, and it drives the price into a realm where there could be a significant correction. By the way, folks, if you're just joining me, you're listening to Gabriel Shaheen, Certified Financial Planner, and your host. More knowledge, more wealth here on every week, and we're talking about all important topics of personal finance. And people chase yield all the time. How did that work for master limited partnerships? Those things kicked out K1s. Those things were oil and gas. Those things got blown the hell up. I see it time and time again. You keep chasing something that's over double-digit returns. Think about it. The S&P 500 has the highest expected rate of return investment in the U.S. equity market. So why would anybody not go try to chase a 12% yield? If it's too good to be true, it is. Wouldn't you rather get a 10% rate of return with something that's almost paying a 1.5% dividend? Wouldn't you rather have access to something like that? Wouldn't that make more sense when you're not just looking for income, but growth and income? And oh, by the way, the income on those funds are crap. They're taxed at ordinary dividends versus qualified dividends. If you're in the highest tax bracket, that's like a 25% difference almost, depending on the state that you're living in. So instead of clearing 10%, you clear 7.5% from an after-tax point of view. So you want to be able to understand the global picture of your situation. Not global like invest in international, mid-caps, small caps. No, like for you, what are you looking to achieve? Because would you want to have $1 million portfolio go to $10,000 a month? Of course I would. But then would you want your portfolio of $1 million 5 to 10 years later to potentially be at $950,000 and $900,000? And keep in mind, that 12% yield would be then on that $950,000 or that $900,000. It's just extremely frustrating when I see this, folks. I cannot stress it enough. Be careful with these. These are option contracts. They're not risk-free. While the S&P 500 is up 150%, you're over here collecting a total income of probably 50% over that 5-year period. You're underperforming this S&P 500 by 1/3. And it's frustrating because I care. And people are selling you this crap, and you see it time and time again. They come to us for help. We're the ones who have to fix this crap. And I'm just here to say be careful. Because when you look at these portfolio and the performance, especially in an environment like 2022, that thing was down almost like 40% in 2022. So be very careful. I heavily recommend it. I see it all far too often. These social media financial advisors, they're not licensed. They don't even tell you their name. They have stupid names like Dividend Income or Dividend Growth or follow me at Dividend Best Hero handle. You don't even know who they are. There's no way you can hold them accountable or liable. Past performance has no guarantee on future results. Same thing with the S&P 500, but my goodness. Take calculated risk. Don't follow some schmuck who's probably 22 years old, 25 years old, who all they experienced was a 2020 during the COVID crash of 3 months when it just rebounded and skyrocketed right after that. And these people turned $10,000 with an option to $175,000, and now they think they're geniuses. Well, those are the people who are weeping now. And I actually do have some respect for some of them because they're showing their portfolio where last month they had 500,000 and this month they're at 200,000. Yes, they lost 60% in 1 month. These are at least individuals who are being honest. They're sharing, and they are sharing the full truth of it, not just making it sound like they're master geniuses with their 50,000 followers. And hey, maybe I'm jealous with my few hundred followers, but that's not the point. The point is I know what I'm talking about and they don't. They have my name. They know where I work. They can track me down. I can get in trouble for what I say out there. And these people are hiding behind a handle where nobody knows who they are. They're absolute schmucks. And you have people listening to them, questioning their investment philosophy, questioning their current strategy, and it's bogus. So please, please, please talk with a financial professional and don't listen to these bozos online that are cherry picking a period of time where they claim they made money, which, oh, by the way, you have no clue who they are. It's an absolute disgrace. The SEC should be working with the Twitter and Instagram to shut these people down. But the problem is even the SEC loses credibility when they're going after the now owner of X. You think they're going to want to listen to these people? Probably not. I wish there was a way that they can attack these accounts and take them down, because the losers in this is the general public. And when you got 50,000, 100,000 people listening to these bozos on these recommendations, God help us all. Folks, I'm a little wound up. I'm going to take a quick break. When I come back, I'm going to try to be a little bit calmer and talk about other things to be aware of. I'll be right back after a few words. This is Gabriel Shaheen, Certified Financial Planner and President of Falcon Wealth Planning. We wanted to offer you a free financial assessment for listening to the show so you can help relate it to your specific situation. We offer multiple services such as retirement planning, where you are today, how retirement looks like, talking about Social Security, real estate, planning, even if you own a business, talking about taxes, not just how to save money today, but also throughout retirement. Talk about investments, making sure you're avoiding those high fees, costs, commissions, and also estate planning and insurance, just making sure you're properly protected if, God forbid, something were to happen. And we're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost. Give us a call. We would love to help. Our phone number is 855-963-2500.
96. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, and fill out the form fill right there on our site.
Welcome back, folks. This is Gabriel Sheen, Certified Financial Planner, and your host of More Knowledge, More Wealth here. And every weekend, we're talking about all important topics of personal finance. And I thought, hey, let's talk about all the stuff that is going on right now in the markets. And I spent the first segment today just talking and blasting all these people that are focusing on yield when they see 12% rate of return, and they get super excited about it and they want to chase it. And it just upsets me all the time when I see it. And you see that quite often, especially with, like, quite frankly, you see this a lot with REITs. And there's a lot out there. One of the most popular one, Annaly Capital Management. This thing yields 12%, but in the past 5 years, it has a rate of return of 3%, where the S&P 500 is 150%. You see this a lot with insurance and annuity sales representatives trying to say risk-free in an equity index annuity. Like, these are the things that just really bothers me, because this is a blatant taking advantage of somebody who's scared of the market. And we talk about all the time with this advice, and you get these cocky people talking about these licensed individuals that are for insurance sales reps. And they are not SEC regulated. These are state regulated insurance salespeople that are calling themselves financial advisors. The funniest part about the whole thing, they're always like some vice president, senior vice president. I'm working with one of the senior people at this firm, the founder, the CEO, this Morgan Stanley or Merrill Lynch, senior vice president, executive, first executive. They have the funniest, stupidest positions, which all mean nothing. All that means is they are somebody who has an unregulated title to make them sound more important than they really are, so you feel like you're getting a much better experience. Quite frankly, it's a genius tactic. Here at Falcon Wealth, you're working with a financial planner. Like, these financial planners are some of the most experienced financial planners in the industry, and they have no fancy title. Maybe I should give them a senior executive VP. Maybe it sounds important, or some director title. But that's just not it's just not how I operate. You have to be in some type of management position to have that. And if that's the case, you're really not working with that many clients to begin with. So you want to make sure that you be careful and beware. Times of volatility is when the sales predators come after you. And if you ever bought some weird gold on internet or some late night infomercials or got sold some type of product, you have a bullseye on your back and people are coming after you. Forever and always, people are going to try to go after and sell you. I always say, like, there could be like this group of people that are taking advantage of other people. These are people, could be scams calling you, pretending they're the IRS, or you have to get these Apple gift cards for customer service on your laptop. These could be some other individuals that maybe are trying to just take a look at just your specific situation and saying, hey, this investment, quote unquote, makes sense. It's fraud. It's pure fraud, some of these things, that people are coming out to you, unregulated investments with gold, late night infomercials, trying to scare you that the America is going to go down. And because of that, you need to buy overpriced, unregulated gold that, quite frankly, is just a scam. Same concept with Bitcoin. Same concept with lottery winners. Once you fell for one of them, I feel like there was a network where they just share it with all the other scammers out there. Hell, if I was you, I'd probably even change your phone number while you're at it. Get a new email address, because that is shared with the rest of the universe, because they know you've been sold. There was a joke I made a while back saying, if you ever bought a timeshare, that's probably one of them that's in that camp. There's two camps, one that literally just got sold and taken advantage of, and the other one that just wanted to feel special at that time, right? Because they make you feel special, they give you free stuff, you feel like a kind of a big shot for that small period of time. So I'm just telling you that we are in a unique time right now, where you have aggressive sales tactic individuals trying to take advantage of you. They want your money. And the worst part about that is once you give it to them, they sell you, you are screwed and you are stuck. And that is a problem for obvious reasons. And the bigger problem is now you have trust issues. This is where you have to take that step back and take some ownership on yourself. You did no due diligence. You did not do any research. And finally, you have a firm out there that's trying to help you, trying to get you out of it, trying to have you make the right decision and go in the right direction, and you don't like what they have to say because it's going to cost you money to get out of that crap. Why does it cost you money? That it wasn't disclosed to you? Because they have to claw back the money they just paid the other guy. They're not clawing it back, right? Because they're not taking it from that person. That salesperson who got that commission is long gone. But the insurance company or vendor that wrote that check has to get back that money from you. Anything that has an exit fee to it, be careful. That doesn't make sense in investing. I understand maybe an illiquid investment, but to lose money from going into it, why the hell would there be a loss? It's to recap the sales commission that you were sold to. And if it was that freaking great, then why did they have to entice the salesperson at 10 to a 20% commission to sell it to you? You have to start taking a look at your situation and saying, it is my fault. This is the time where I'm going to take a stand and stop working with these people that consistently take advantage of me. Find a partner. It's clear. If you kept getting robbed or mugged or bullied or beat up, you got two things. Learn how to defend yourself or hire somebody or something to help protect you. But you have to act. And some of the most important pieces of your whole life are your financial situation. I get it. Health is important. But there's reason people have bodyguards. There's reason people have guns. And there's reason that people learn truly how to defend themselves. And you have to do it with knowledge and education and finance. If you don't want to do it, you got to get a financial partner. You have to be able to pay somebody where they can tell you no, beware, yes, okay to buy, or you just have a partner where every time you get this new scam in the mail, you pass it over to them, because it is frustrating when I keep hearing all the mess ups. When they come to our firm, and we get thousands of people a month that come to us, and they ask us, what should we do? Then we tell them what they do, and they're mad at us. It wasn't us that bought the crap. It was you that bought the crap. And now this is your time to fix it. This is the times and the situations that just infuriate me. By the way, folks, if you're just joining me, you're listening to Gabriel Shaheen, who seems to be upset right now for some bizarre reason, talking to himself, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend. And we are talking about all aspects of personal finance, including the predatory sales people that come to you. And then there's even worse than that. There's affinity scams as well. People that you know from the softball or baseball or wrestling or your local church or synagogue or whatever it is, and your guards are down and you trust them blindly. You also got to be aware of those people as well. Do your background. Do some research. It's very clear. If you could go to the FINRA broker check. Go to ADV SEC and look up the firm, see if they had gotten in trouble before. Look at the advisor, see if they got in trouble before. See how many people are working there. See if you can find them on LinkedIn. Like literally, the research is on your fingertips. Do not put your guard down when it comes to your money. And I get it, it's convenient to do so. And just because you made an agreement to do something, you can back out of that agreement. I'm serious. I'm not even kidding. You tell somebody you wrote the dotted line and you just feel funny about it, get out. I don't care if they're your golfing buddy, your poker buddy, or your church buddy. Get the hell out of it. Something changed. I need my money. I can't do it. I forgot I had this other commitment. Sorry, can't do it. And if it's so easy to bash somebody else, but when I tell you specifically the reasons why of locked in money, you don't have access to it. You got to wait 5, 7, 10 plus years to have access to your money. And oh, by the way, you try to get out, there's a charge to do it. You buy a stock to sell that stock. There's no charge to sell that stock. The S&P 500? Give me a freaking break. But what, you're going to promise me this crap over here off to the side? Guarantee you can't lose money? Listen, that's equivalent to a CD. I respect that. But then when you try to sell somebody this equity index annuity or these type of annuities over here where most of the time I wish you did a fixed index, not a fixed index annuity, but I wish you did a normal fixed annuity. I really did at that point, because you'll probably get a better return there because they have uncapped losses and they cap your winnings and you end up losing. I've just seen it time and time again. Find me somebody who's happy with that being locked in 10 to 15 years. And let's ask them. Let's interview them. Seriously, reach out to radio@falconwp.com. That's radio@falconwp.com. I would love to answer that question and bring you on the show. Let's talk about it. Like you're gonna let's have, and there was somebody who said they were gonna argue with me on the 5th. I should reach out to them and say, do you want to be on my show? Let's talk. Let's discuss the narrative of insurance where you think it's tax-free money for life. Like, let's discuss that. It's absolute bogus and it's trash. And I would love to bring those people on my show. I'm going to make that my New Year resolution here in March and April to do that for the rest of the year. So let's plan on that.
That was a fast show, folks. I want to thank you for tuning in with us this weekend. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go and visit our Knowledge Center, which redirects you to YouTube. We have over 1 million views, folks. And if you want us to discuss anything on YouTube, on the show, whatever, send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And if you want this episode, any one of our previous episodes, you can go on podcast, Spotify. We have them all there. And folks, we want to thank you for your trust. We want you to feel free and feel comfortable. Reach out with any questions that you have. I want you to have a fantastic weekend. Have a great week, and God bless.